Hello, my fellow classmates. Today I have the pleasure of presenting this homework tutorial for Week 2 Quiz Access Chapters 1 and 12, questions 13 through 15. So we're going to start on question 13 today, or at this time, and it starts with this box right here that says, on December 1st, Jasmine Ernest organized Ernest Consulting. On December 3rd, the owner contributed $84,200 in assets in exchange for its common stock to launch the business. On December 31st, the company's records show the following items and amounts, with various items and amounts that will be useful later for our accounting purposes. So the first question, question 13, is really asking for us to prepare a income statement. Now, income statements have multiple parts. First, we know that income statements are for the month that ended in December 31st, not December 31st. It's for the whole month. It's not a specific date, but a period of time. Next, we know that income statement starts with revenues on the top and then expenses on the bottom. Now, to find out the revenues, we go back up to this list and we look in this box for anything that might be a revenue. Now, the revenue we see here is consulting revenue, which for the amount of $14,600. So we take that amount, go back down to this box, and put that right here as consulting revenue for $14,600. Now, I didn't see any other revenues, so we move on to expenses. So go back up, look back in this box for any expenses, which would be these last four items down here of rent expense, sales expense, telephone expense, and miscellaneous expense for various dollar amounts. So we take each of those, put them into the boxes, start with rent expense, then salaries expense, then telephone expense, and miscellaneous expenses. Then we match each expense to the proper dollar amount and put that into the chart. So rent expense is $30,750, I believe. Yes, and then salaries is $7,160. Telephone expense is $780. Miscellaneous is $600. Thankfully, the chart totals up the total revenues and the total expenses for us. So next, we just need to take total revenue and subtract that from total expense. So that'll be 14,600 minus 12,290. Which would get you 2,310. So you put in that down here. And as we know, at the very, very bottom is net income. And so that would be our net income, which is total revenues minus total expenses, which would be 2,310. The next question uses the same chart of itemization, but this time we are asked to prepare a statement of retained earnings. So with a statement of retained earnings, it's also for a whole month, not a specific date, but a range of dates. So at the top, it already has put in the retained earnings at December 1st, which is 0. We've already put that in for us. Next, we need to put what you add, which is net income, and what you take away, which is dividends. And then at the bottom will be retained earnings on December 31st. So the net income we get from the previous problem, right here, net income right here, which is 2,310. You put that into net income. Then dividends, you look up in this box, and you'll find that dividends are right here for 2,180. And there's no other dividends in the box. So you put in 2,180 for dividends, cash dividends, and it'll automatically come up with subtract dividends from net income for us to get us 130 as the retained earnings for December 31st. Pretty short question, pretty easy. The final question, question 15, uses the same itemization, but this time we are preparing a balance sheet. Now with balance sheets, the numbers should balance out on both sides at the end. That's why they call it a balance sheet. And as we know, at the top, balance sheets are for a day. They're usually for an end of the month, which is December 31st. We have assets on the left, liabilities on the right, and then equity down here. Then we go back to this box, start with assets, look at all the different types of assets, which would be cash, office supplies, accounts receivable, land, office equipment, and those are all the assets that we see. Would be cash, accounts receivable, office supplies, land, and equipment, because those are assets to the company. So we take those items and mash them up to numbers and put them into the asset side of the balance sheet below. So I put in cash, accounts receivable, office supplies, office equipment, and land. With cash being 10,710, accounts receivable being 14,600, office supplies being 3,450. Personally, I like to keep the balance sheet similar to the itemization, but that's just a preference. It doesn't really matter. Land is for 46,030. And office equipment is 18,170. Just double checking my work, making sure I got all the numbers and the amounts correctly put into the balance sheet. And so that brings us to total assets. Total assets being 92,960. So this number, if we do everything right, should be the same on this side over here as well when we're all said and done. Then within the liabilities, we go back to the box, look for our liabilities, which would be accounts payable. Now we know it's accounts payable because the company is liable to pay those accounts back eventually. They're not an asset, but they are quote unquote liable for that money, for this money to other people that they've either borrowed from or gave a credit to. So it'd be accounts payable, which would be 8,630. Then in the equity, go back to the box for equity. And various equity would be common stock and retained earnings, which is not on this list, but is from the previous question. This previous question, we have the retained earnings, which will be a part of the equity. So if we go back to question 15, we'll see common stock as common stock, which is 4,200. And then we also have retained earnings, which is 130. And common stock plus retained earnings equals total equity, which total equity is 84,330. Then finally you add up total liabilities and total equity, which would be 88,630 plus 84,330. And thankfully it does it for us down here, which gives us 92,960 as our total liabilities and equity. And as you can see, on the left-hand side of total assets and the right-hand side of total liabilities and equity, they equal each other with 92,960 to 92,960. It's important that these balance out so that you have assets to pay for your liabilities and equity, where liabilities are more like a negative and assets are more of a positive. And so you want them to balance out. Now that's it for this tutorial of week 2 quiz access chapters 1 and 12, questions 13 through 15. I hope this tutorial helps, and I hope you have a great day.